Grab Holdings reported some great news for stock market investors in its recently completed quarter, with revenue growth accelerating and profits expanding. Management expects the good times to continue, and I wanted to share with you those details here and update my recommendation for Grab Holdings stock. The company's management team highlighted that they delivered another quarter of profitable growth, and their growth has re-accelerated to 21% year over year. Moving forward, they'll continue to track their record, working very closely with governments and regulators. This is especially important for its finance division and to ensure that their partners and users can navigate this period of uncertainty well. And that period of uncertainty, one of the main reasons for that is the increase in trade barriers from the United States against all of its trading partners, which is likely to decrease macroeconomic growth worldwide, especially if you're dependent on the United States for trade. The more dependent you are for the United States for trade, exports and imports, the more likely you are to be impacted as a result of these changing trade policies. And for the most part, the changing trade policies are going to be negative for most countries around the world. Now, I say that for the most part because there is going to be some winners and losers. The tariff rates against China are so incredibly high that other countries in Southeast Asia may benefit as a result of gaining market share from businesses moving away from China and looking to establish manufacturing facilities outside of China, but still not in the United States because it's still prohibitively not cost effective to be in the United States unless you're getting a lot of incentives and your tariff rates are, the administration is really attacking you on tariffs, and then it makes sense to establish U.S. operations. But it seems like for the most part, businesses are moving out of China if they can on the margin and establishing facilities just outside of China or a little bit around that area, because of the cost of production is so much lower. And so if you're in one of those Southeast Asian economies where Grab Holdings operates, you're experiencing a slowdown because the tariff rates are much higher than they were before. So manufacturing output will likely decrease in your country, and so macroeconomic growth will decrease. But at the same time, you're gaining some market share from businesses moving out of China. So there's a lot of moving parts, and it remains to be seen. So a lot of uncertainty, to be sure, and Grab Holdings is working with its customers and providers. Click the link below to watch the full video.